A little over 3 years ago, a virus that no one had ever heard of started spreading rapidly in the city of Wuhan, China. Before anyone knew it, it had spread throughout the country and eventually made its way to the rest of the world. That virus, of course, was COVID-19, and it brought the global economy to a screeching halt. The pandemic caused unprecedented economic disruption, with businesses shutting down, millions of people losing their jobs, and economies around the world contracting. In 2020, the International Monetary Fund, IMF, projected a 4.9% contraction in the global economy, which was the worst since the Great Depression. Countries like Italy, Spain, and the UK were hit particularly hard, with their economies contracting by 8.9%, 11%, and 9.9%, respectively. The United States, which has the largest economy in the world, saw a 3.5% contraction in 2020. The pandemic also had a significant impact on employment, with millions of people losing their jobs or being furloughed. In the UK, for example, the unemployment rate rose to 5.1%, the highest it had been in nearly 5 years. In the United States, the unemployment rate hit a record high of 14.8% in April 2020. Governments around the world responded with unprecedented levels of fiscal and monetary stimulus, with the IMF estimating that global financial support amounted to around $14 trillion. Despite these efforts, however, the economic fallout from the pandemic is likely to be felt for years to come. In this video, we'll concern ourselves mainly with thoughts of what could have been, how the pandemic affected the U.S. economy, and if there were any positives to take away from the plague that held the world hostage. We'll also take a look at how soon it'll be before the world fully recovers from its effects. How badly did COVID-19 affect the U.S. economy? And how far back has the pandemic pushed the American economy? Before the pandemic hit in early 2020, the U.S. economy was actually doing pretty well. In fact, it was in the midst of the longest economic expansion in U.S. history, having grown for 128 consecutive months since June 2009. During this period of expansion, the unemployment rate dropped to a 50-year low of 3.5% in December 2019. This meant that more people than ever before were able to find jobs and support themselves and their families. In addition, the stock market was also performing strongly, with major indexes such as the S&P 500 and the NASDAQ reaching all-time highs in February 2020. Other economic indicators were also positive, such as GDP growth, which had been steadily increasing since the end of the Great Recession in 2009 and was projected to continue growing at a modest but steady pace. Overall, the U.S. economy before the pandemic was characterized by low unemployment, a strong stock market, and steady economic growth. While there were certainly challenges and inequalities still present, many people were feeling more financially secure and optimistic about their future prospects. The pandemic, however, brought about a sudden and severe economic shock, with many businesses forced to close their doors and millions of people losing their jobs almost overnight. The severity and duration of the pandemic has had a significant impact on the U.S. economy, and its effects are likely to be felt for years to come. According to the Bureau of Labor Statistics, the unemployment rate skyrocketed from 3.5% in February 2020 to a peak of 14.8% in April of the same year. While the unemployment rate has since come down, it remained at 4.2% as of December 2021, which is still higher than pre-pandemic levels. The pandemic has also had a severe impact on businesses, with many small businesses closing their doors permanently due to the economic downturn. A report from the National Bureau of Economic Research found that the number of active business owners in the U.S. decreased by 22% between February and April 2020. The pandemic has also had a significant impact on GDP growth, which saw a sharp decline in 2020. The Bureau of Economic Analysis reported that GDP decreased at an annual rate of 31.4% in the second quarter of 2020, the largest quarterly decrease on record. While GDP growth has since rebounded, it is still below pre-pandemic levels. Furthermore, the pandemic has also contributed to rising inflation, which is eroding the purchasing power of Americans. The Consumer Price Index, CPI, a measure of inflation, increased by 7% over the 12-month period ending in December 2021, the highest increase since 1982. Are there any positives to be taken from the effect of the COVID-19 pandemic on the U.S. economy? The COVID-19 pandemic has had an undeniable negative impact on the U.S. economy, with millions of jobs lost and businesses forced to close. However, there are some potential positive effects that have been observed or suggested by recent research. One of the most notable positive impacts has been on the environment. With many people working from home and travel restrictions in place, air pollution levels have decreased significantly in many cities. According to a study published in the journal Science of the Total Environment, levels of nitrogen dioxide, NO2, a harmful air pollutant, decreased by 30% in New York City and by 20 to 38% in other major U.S. cities during the pandemic. This reduction in air pollution could lead to improved public health outcomes, especially for vulnerable populations. Another potential positive impact of the pandemic has been on the adoption of new technologies and ways of working. With so many people working remotely, businesses have been forced to adapt and find new ways to collaborate and communicate. This has led to an increase in the use of video conferencing platforms like Zoom, as well as other digital tools for collaboration and productivity. Some researchers believe that this shift towards digital technologies could lead to greater efficiency and productivity in the long term. The pandemic has also led to an increase in online shopping and e-commerce, as people have been hesitant to visit physical stores. This has created new opportunities for businesses to reach customers and expand their reach online. A report from eMarketer estimated that U.S. e-commerce sales increased by 32.4% in 2020, reaching $794.50 billion. Additionally, the pandemic forced businesses to be more flexible and creative in their operations, which could lead to greater innovation and competitiveness in the long term. For example, restaurants and other food service businesses have had to find new ways to offer takeout and delivery services, and many have implemented new safety measures and protocols to protect customers and employees. The pandemic also highlighted the importance of social safety nets and support systems for vulnerable populations. With so many people losing their jobs and struggling to make ends meet, there has been greater recognition of the need for programs like unemployment insurance, stimulus checks, and food assistance. These programs have helped to mitigate the economic impact of the pandemic for many people and could lead to greater support for social safety net programs in the future. How long will it take for the world to recover from the effects of the pandemic? It is difficult to predict exactly how long it will take for the U.S. economy and the world at large to fully recover from the effects of the pandemic. There are a number of factors that could impact the speed and trajectory of the recovery. One of the biggest factors will be the effectiveness of policy responses from governments and central banks. The U.S. government has implemented a number of measures to support businesses and individuals during the pandemic, including stimulus checks, unemployment benefits, and small business loans. The Federal Reserve has also taken aggressive action to support financial markets and maintain liquidity. The effectiveness of these policies in mitigating the economic impact of the pandemic will depend on a number of factors, including the duration of the pandemic, the severity of the economic downturn, and the political will to continue supporting the economy. The pace of technological innovation and adoption could also play a role in the speed of economic recovery. The pandemic has accelerated the adoption of digital technologies in many industries, from remote work to e-commerce. If this trend continues, it could lead to greater productivity and efficiency in the long term, which could help to support economic growth. On the other hand, if technological change is slow or unevenly distributed, it could exacerbate existing inequalities and slow the pace of recovery. Finally, global trade and international cooperation will be critical in determining the speed and trajectory of economic recovery. The pandemic has highlighted the interconnectedness of the global economy and the need for coordinated action to address global challenges. If countries are able to work together to address the health and economic impacts of the pandemic, it could lead to a faster and more robust recovery. However, if countries turn inward and adopt protectionist policies, it could slow the pace of recovery and prolong the economic downturn. When the pandemic came, the world stood still for a while. But 3 years down the line, the world seems to have moved on to a path of recovery. Let's hope we can rid the world of it soon.